Are you intrigued by the world of real estate but hesitant about owning property outright? Maybe you've heard about REITs and property crowdfunding, two popular alternatives for investing in real estate without the hassle of direct ownership. But how do you decide which option is best for you? In this video, we'll break down everything you need to know about REITs and property crowdfunding, including their pros and cons, to help you make an informed investment choice. Let's dive into the nitty-gritty details and discover which strategy aligns best with your financial goals. What is a REIT? A REIT, or Real Estate Investment Trust, is a company that owns and operates income-generating real estate. These can range from office buildings and shopping centers to apartments and hotels. When you buy a share in a REIT, you're essentially buying a small piece of this extensive portfolio, similar to purchasing a stock in a company like Apple. You don't own any specific property. Instead, you own a share of the company that manages the properties. How does a REIT work? REITs operate under specific guidelines, one of which requires them to distribute at least 90% of their taxable income to shareholders in the form of dividends. This makes REITs a potentially lucrative investment for those looking for regular income. Additionally, REITs are traded on major stock exchanges, offering the benefit of liquidity. You can buy and sell shares with ease, just like you would with any other stock. Now let's take a look into the pros of investing in REITs. Number 1. Liquidity. REITs can be bought and sold easily, providing flexibility and access to your capital. Number 2. Diverse portfolio. Investing in a REITs give you exposure to a wide range of properties, reducing the risk associated with individual investments. Number 3. Accessibility. REIT shares can be purchased with relatively small amounts of capital, making them accessible to all types of investors. Number 4. Professional management. REITs are managed by experienced professionals, which can be reassuring for investors who prefer not to get involved in the day-to-day management of properties. Now, it's time to look into the cons of investing in REITs. Number 1. Lack of transparency. Investors may have limited insight into the specific properties within a REIT's portfolio. Number 2. Limited control. Shareholders have no say in the management decisions of the properties. Number 3. Market fluctuations. REIT values can be volatile and are subject to market swings, similar to stocks. Number 4. Liquidity premium. The ease of trading REITs comes at a cost, as the value of the shares may include a premium for this liquidity. What is property crowdfunding? Property crowdfunding involves pooling funds from multiple investors to purchase a specific real estate asset. This method gained popularity after the Jobs Act of 2012, which allowed for greater public solicitation of investment opportunities. Platforms like Fundrise and Realty Mogul have made it easier for individual investors to participate in these deals. How does property crowdfunding work? In property crowdfunding, a project sponsor lists a real estate deal on a crowdfunding platform. Investors can then contribute funds to the project, often with a minimum investment requirement. The sponsor handles the management and development of the property, and investors receive a share of the profits based on their investment. Now let's talk about the pros of property crowdfunding. Number 1. Direct ownership. Investors own a share of a specific property, offering a tangible connection to their investment. Number 2. Transparency. Crowdfunding platforms typically provide detailed information about the property, including financials and business plans. Number 3. Potential for high returns. Crowdfunded projects often aim for higher returns to attract investors. Number 4. Low correlation to stock market. The performance of crowdfunded real estate is less tied to stock market fluctuations. Now let's take a look into the cons of property crowdfunding. Number 1. Less liquidity. Investments are typically locked in for a set period, often several years, making it difficult to access your capital quickly. Number 2. Management expertise. The quality of management can vary, making due diligence crucial. Number 3. Greater risk. Individual projects can be riskier, and investors may face significant losses if a project fails. Well, now, it's time to take a look into some of the main key differences between REITs and property crowdfunding. Number 1. Liquidity. REITs are highly liquid, allowing investors to buy and sell shares quickly. In contrast, property crowdfunding investments are illiquid, often requiring a multi-year commitment. Number 2. Minimum investment. REITs can be purchased with minimal capital, sometimes as little as the cost of a single share. Property crowdfunding, however, usually requires a larger minimum minimum investment, though some platforms allow investments as low as $100. Number 3, portfolio versus individual asset. When you invest in a REIT, you're investing in a diversified portfolio of properties. Property crowdfunding typically involves investing in a single property, which can increase risk but also provide more specific returns. Number 4, profit sharing. REITs are legally required to distribute at least 90% of their income to shareholders. Property crowdfunding returns vary based on the specific deal and sponsor agreements. Number 5, management experience. REITs are managed by experienced professionals, providing a layer of security for investors. Property crowdfunding management experience can vary, making thorough research essential. Which one is right for you? Choosing between REITs and property crowdfunding depends on your investment goals, risk tolerance, and need for liquidity. If you value liquidity and lower risk, REITs might be the better choice. They offer easy entry and exit, professional management, and regular dividends. If you're willing to take on more risk for potentially higher returns and enjoy the idea of owning a piece of a specific property, property crowdfunding could be appealing. Both investment types can be valuable additions to a diversified portfolio, offering exposure to real estate without the need for direct property ownership. Evaluate your financial situation and goals to decide which option aligns best with your needs. Investing in real estate doesn't have to mean buying property outright. REITs and property crowdfunding offer accessible, flexible, and potentially lucrative ways to enter the real estate market. By understanding the key differences and benefits of each, you can make a more informed decision and choose the investment strategy that's right for you. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more amazing content. Thanks for watching, and we will see you in our next video.